which is why where these reforms too come in, the tax reforms that he talked about, okay? The tax reforms, currently packaged, will go a long way to enable small businesses to grow, because it has a lot of exemptions for small businesses. If you're a small business, defined as any business with a turnover of less than 50 million naira, okay, you are not paying tax. The whole idea is to allow you to breathe, to allow you to grow. So by the time you grow, you're now in a position to begin to also approach the capital market for more funds, okay? And that way, you can grow. Today we have over 5 million, if I'm correct, if I'm not mistaken, 5 million companies registered with the CAC. Well, how many companies are listed on our market? Just 153 companies listed on the Nigerian,
What do you attribute to that?
Yes, a number of factors, including even this awareness that he talked about. Awareness. And I'm happy to also say here that in the last 9 months, we can say that there has been, in terms of market education, market awareness, a lot of traction has been recorded. At least I teach in the universities. I teach in some other, not just one university. I'm also a visiting professor to some other universities. So I can tell you that the level of awareness, at least in the last 1 year, has really increased. One that SCC has done recently, okay, thanks to him, is to set up a committee to review the curriculum for Nigerian universities, and the capital market curriculum for Nigerian universities, the one developed by NUC. Okay, there's a committee that the SEC put in place, to do that, because we over the years we've been talking about introducing capital market studies in tertiary institutions, introducing capital market studies in secondary schools over the years. So in the last few months, that effort, as I said, has gained traction. So a lot of awareness is being created, and it will go a long way to also impact on mutual funds, which you also mentioned. Because for me too, one way you can galvanize small savers to be part of the capital market is through mutual funds, through collective investment scheme, because that is where you can, for example, John, if you want to participate, if you have your 100,000, you can put, Jomai, you bring your 200,000, I bring my 100,000, we pull the money together for investment. Because if I say I want to buy, for example, I want to buy a stock like Seplat, I won't be able to buy Seplat, because one share of Seplat is 5,700 naira, just one stock. For Airtel is over 2,000 naira, just one. So I won't be able to get those stocks. But if I go through a mutual fund, I should be able to now participate in.
How safe are these mutual funds?
No, of course, very as safe as well, of course, safer than most asset classes. They're much, because you are also investing. Remember, he mentioned it. When you invest in a cross section of securities, you are diversifying, well, your portfolio, and also minimizing your risk. So to that extent, mutual funds are safer than direct investment, in the market, because you have a manager there who has the skills, who understands the market, who is helping you to do the investments. So to that extent, they are safe. And remember too, the mutual fund is not only invested in the shares. The mutual fund is also investing in very safe, secure securities, such as government securities, such as bonds. Government bonds are very safe. Okay, they're also investing in money market treasury bills. They're also safe. That is why the mutual funds route, is quite safe. Now I have veered off, completely. To your specific question, I don't remember what.
Yeah, what are the gaps? How do you address the gaps in the regulatory, framework of the?
Okay, well, talking about the gaps in the market. Well, you can also speak the gaps. You can connect them with the challenges. Okay, I just mentioned one. The market is still small. To that extent, it poses a barrier. I'm aware too that even in the capital market master plan, he mentioned mutual funds, size of mutual funds, 3 trillion. The target for 2025, okay, in the master plan is, I think, 4 trillion. The target is also saying that we expect to see a minimum of 5 million active trading accounts. But so far, we don't have that. So we still have, if you like, going by that master plan, we still have a long way to go. But the good thing, or the good news, is that if you look at some of the things that have been put in place, especially recently by the Commission, one can say that, pretty soon, we will achieve all of that. So in terms of gap, yes, the challenges are there. He also talked about what they have done in terms of time to market. Reducing time to market to 14 days, that's a feat, okay? What I will also want to see, in that market is also reducing the transaction cycle for equities. Transaction cycle for equities is still something that discourages people from investing. That's T plus 3 days. So in some other jurisdictions, you have it as T plus 1. So in other words, if you sell stocks today and you want to get your money, the next day you should have your money, or even instantly. But in our own case, you have to wait for some days before you get your money. So that transaction cycle. Is it just some days?